Good morning this Wednesday, the 31st of May. I'm Grady Bull for Market Analyst with Balderite. It was a very muted session on the ASX yesterday as the market quickly overcame the boost from US debt ceiling negotiations ending in an agreement to be presented to Congress. And investors quickly shifted focus ahead to next week's rate hike decision out of the RBA and the potential for inflation to remain stickier down under for a little while longer. The ASX fell 0.11% on Tuesday, weighed down by a 0.88% fall in the REIT sector, while communication services stocks rose 0.62%. Paladin Energy tanked over 20% on Tuesday before being put into a trading halt as investors fled the uranium miner on rumours that Namibia may follow the Chilean government's move to nationalise some mining assets. Paladin's Heinrich mine is in Namibia, which is why investors fled the stock yesterday. The sell-off in miners with operations in South Africa extended to Syrah Resources, whose Balama Graphite operation is in Mozambique, which is in the same region as Namibia. Austrac and embattled casino giant Crown proposed an agreed $450 million penalty to Crown to cover breaches of anti-money laundering laws at the company's Melbourne and Perth casinos. The matter will be heard in court on July 10 and 11. On the economic data front yesterday, building approvals in Australia sunk 8.1% month on month in April and down 25.5% year on year, with private sector housing down 3.8%. The market was expecting a rise of 2%, but the sharp decline of 8.1% takes new approvals for new home builds to the lowest level in 11 years, in a sign that appetite for building investment properties remains weak and will continue dragging on the economy. Over in the US, stocks rallied in the early hours of trade on Tuesday as investor sentiment was high following the initial agreement being reached over the debt ceiling crisis. Tech stocks were the top performers, led by an AI stock rally after Nvidia became the first chipmaker ever to join the $1 trillion market capitalization club last week. In afternoon trade, the key indices pulled back though, as investors kept a close eye on the Fed's debt ceiling debates and also the potential outlook for another rate hike out of the Federal Reserve next month, with the Dow Jones closing Tuesday's session 0.1% lower, while the S&P 500 closed flat and the tech-heavy Nasdaq rose 0.3%. In Europe, markets had a turbulent session on Tuesday as investors in the region follow progress in the passing of the US debt ceiling agreement through Congress. After a group of Republican lawmakers said on Monday they would oppose the deal reached by President Biden and House Speaker Kevin McCarthy over the weekend. Germany's DAX fell 0.27% on Tuesday, the French CAC lost 1.29%, and in the UK the FTSE 100 fell 1.38%. On the commodities front this morning, oil has plunged 4.47% to trade at $67 and 73 cents a barrel ahead of OPEC Plus's meeting this Sunday and amid the US debt ceiling saga. Gold is up at 0.81% at $1,958 an ounce, and iron ore is up 2.45% at $104 a ton. One Aussie dollar is buying 65 US cents, 91.05 Japanese yen, 52.89 British pence, and 1 New Zealand dollar and 8 cents. Ahead of the local trading session here in Australia, the SPI futures are anticipating the local index to open 0.5% lower on dampened global sentiment over the passing of the debt ceiling through Congress. And now let's dive into some trading ideas for your consideration today. Bell Potter has increased the price target on Clarity Pharmaceuticals from $1.35 to $1.40 and maintain a speculative buy rating on the clinical stage radiopharmaceutical company, following a report out of the company on progress in its latest clinical trial, investigating the use of its proprietary radiopharmaceutical for the treatment of metastatic castrate-resistant prostate cancer. The update outlined Cohort 1 dosed 6 patients and the treatment was well tolerated, and Cohort 2 will now commence at a higher dose of the treatment. And Trading Central has identified a bullish signal on Service Stream on the 30th of May, following the formation of a pattern over a period of 16 days, which is roughly the same amount of time the share price may rise from the close of 64 cents to the range of 73 to 75 cents, according to standard principles of technical analysis. And that's all we have time for this morning. Have a wonderful Wednesday and happy investing.